In this video, I'm going to show you how to identify the start of a new trend, where the break of structure occurs, which would be your signal to get into that trend. And I'm going to show you what to look out for so that you can avoid getting trapped by entering too early into that trend. Let me show you an example with a quick drawing. This is what it would look like. So if we use our tool set over here, price action was moving down, creating lower lows and lower highs. There's your next lower low, lower high, lower low. Now, what may happen in trading is you often get a big push up, right? Once price action closes over here, it's going to be clearing the level on the left-hand side, making its first higher high. We call this a break of structure. And I'll show you an example in the other direction too. But let's first focus on the upside break of structure. Price closes there, comes back down. Sometimes it can create a trap type scenario where it creates an immediate lower low. This is why you don't want to buy the first higher high in the trade. You don't even want to buy the first higher low. The first higher low could take place over here, and then you might end up getting another lower high. And if you look at that from your previous lessons, what does this look like to you? Well, from the prior lessons, you can see this is a head and shoulders pattern, right? So let's quickly redraw that chart for you and see where you would get your entry. Lower highs, lower lows, break of structure. You cleared the left-hand side. That's your first higher high, first high low, second higher high, second higher low. This would be the earliest point that I would look to gain an entry, would be over there. And using your trend line, what do you see over here? Generally speaking, price is moving in an upward direction. You have a support level to work with. So when taking a trade, it would look like this. Let's grab our risk to reward tool. Your entry would be on the second higher low, would be your first and earliest point to enter. Your stop loss would go below the prior higher low, which is that one over there. If price goes back below that level, you're incorrect on the trade idea. And let's just pretend that your next major resistance is coming up at this level. This is what the trade would look like. So ultimately, your expectation would be that momentum would continue in the upward direction, because trends continue until such time as structure is broken. Structure was just broken over here to the upside for the very first time, creating your first higher high in relation to the left-hand side over there. There's your next one, high low, higher high, enter the trade, stop goes below here, price action should continue into the next higher high, and then you can continue to scale into that position. If it rolls over from here, creating a lower high, you can be cautious, raise your stop loss back into break even to reduce your risk, because there's a possibility it's going to go down and take out that level. Therefore, you can already remove the risk out of the trade. All right, now let's consider when price action moves in the opposite direction. So you have an uptrend which is coming to an end. Higher highs and higher lows, higher highs and higher lows. Price continues up. And for the first time, you have a change over here. You have a break in structure, right? Let's quickly pause that over there. Where is the break in structure? Well, this was your last high low. You've taken that area out. Let's zoom in for you. You've now taken this level out. This is a complete break in structure. Price went lower. You don't enter into a short trade yet. You wait to see what price action does next in case it goes higher. In that instance, if it did this level at the bottom over here would be a trap. This would be a trap scenario. So you wait for price action to complete the first lower high. Boom. Now you're interested. Wait again for the next lower low. That's your second lower low. Where do you enter? On the second lower high, which is over here. Enter the trade and the trend should continue. This would be your trade setup over here. Grab the short tool, enter into the trade over there. Stop loss goes above the prior lower high, and you're targeting your next major resistance zone, or in this instance, your next major support zone, because you're playing the market to the short side. Now let's have a look at the live price action chart over here with the candlesticks. I want to give you an example of how you can make this a lot cleaner and easier for yourself. Remember that when you're looking at the candlesticks, you have the body of the candle as well as the wick. Now, the body of the candle has much higher significance and importance than what the wick of the candle has. So in order to clean this chart up and avoid the noise, it's especially useful when you're on a super low time frame, like a 3-minute, 5-minute, or 15-minute chart. All you need to do is go to your candles on the top over there, click the candles, move it onto a line chart, and that will give you a much more clean look. You can see it a lot cleaner over here. There is your first higher high. How do we know that this is the first major high and a break of structure? Again, look to the levels on the left-hand side. This was your last lower high. So here's your lower highs. Here's your next lower high. You got 1, 2, 3. Price action now pushes up, breaking that structure, creating the very first higher high. Here's your next high low. And there you go. You can see the trend continues towards the upside.